You're listening to Leadership Powered by Common Sense with your host, Doug Thorpe. Here's Doug.
Well, hello again, everyone. I hope you're having a great day or night wherever you may be. I say that because my guest is graciously joining us. It's nighttime where he is, but this is another episode of Leadership Powered by Common Sense, and I'm your cruise director, Doug Thorpe. Today, we're going to turn our attention to capital markets and many activities going there. As any of you who are regular listeners of my show know, I never make the show about politics. I let other people do that. But in respect to what's going on in the world of finance today, I think there's undeniably a lot of uncertainty, speculation. I've heard people talk about all ends of the spectrum. And my guest today is someone who's the leader of a very good capital firm, originally based in Dallas. It's called Raven, and his name is Paul Scribner. Paul, welcome to the show.
Thanks, Doug. Pleased to be here.
Yeah, so I know it's kind of a maybe an overloaded question. Let me dive right in. Where do you see the capital markets these days? Are there sectors that are more stressed than others, or do we have a lot of capital on the sideline waiting to jump in for something? Where do you see things?
Sadly, Doug, I think this is a situation where it's just continuing on from what we saw during the pandemic. Is so many people because of uncertainty. I'm talking about retail investors, I'm talking about institutional investors, private equity. People are on the sidelines because they don't know how to measure risk. They don't know what's going to happen, things that they used to be able to count on, momentum in the market, certain actions based upon, or reactions, I should say, based upon actions are now no longer as certain, clear, and settled as they were in the past. And I think that's what we have going on here in capital markets all across sectors. I think there are niche, pockets of activity that we're seeing, but overall, we're seeing a lot of people pare back, hold back, make credit decisions that you weren't expecting. So it's a time where it's not for the faint of heart, for sure, to be out in the market.
Yeah. So I probably should have asked, as a little bit of a level set, help folks understand kind of the dynamic and the part of the market that you serve.
Sure. And previously, I and my team, both at General Holdings and at Raven Resources, we served large corporates that were borrowing in the institutional markets, or small and medium enterprises that were borrowing in both the private and institutional markets. And everybody on my team is either a recovering banker, ex-banker, investment bankers, or commercial bankers, or existing lawyers. And so while our firm acts for ourselves as principal, all of us have a client centered background, and we're used to servicing clients, and we still try to approach our own business that way and see ourselves, even though now we're hopefully writing checks to buy companies or to purchase a financial asset. We still view ourselves very much so in the customer service business. And so Raven Resources is, as you said, based in Dallas, and we're active in the U.S. market. So that's the focus of our capital markets.
I chuckled at one of your comments, recovering banker. I resemble that remark.
Okay.
Spent 20 plus years in banking and financial services, and know very well that
Yeah.
customer centric idea. Uh, the legacy bank that I was a part of was very much oriented in as a commercial bank more so than a retail bank, and so we were famously, and even our TV commercials, we were famously, walking the shop floors and the warehouses and the shipping docks and all those things with our client companies. So that sort of mode of operation was
Yes.
certainly ingrained in me, and so I can really relate to that. Um, so many places to go and talk about, I guess, in this space right now. But like I said, I guess my concern is trying to address and maybe level set a little bit. Let's, if you don't mind, you did mention experience in the small and mid cap sectors. What are you hearing? Is that mainly in the acquisition space, the smaller companies that are being
Yes.
dumped
And
on the
that and
market,
that's
if you
what
will?
we're in now. I mean, we are Raven is a purchaser of small and medium-sized businesses. And we're also an active borrower in the financial markets. And sometimes in deals, we are a sponsor, and we're then also working with others to structure finance and borrow there. So we are very active in a few states in the U.S. And as far as clarify a little bit for me what you mean by what am I hearing, or what am I seeing? I'd
Well,
love to give you
I
more
guess
color.
yeah, the basis of my question was there has been much written about what some are calling the silver tsunami that is upon us. The baby boomers that have built businesses, held them for 20 plus years, maybe longer, now facing, their own aging out and wanting to exit the business, and maybe there is no family generational handoff
Yes,
opportunity. So they're considering putting the businesses up for sale, and there are a lot of players that have run to that market or that space and tried to make different propositions about facilitating those buy sell
yeah,
transactions. And yeah,
sure,
that was the basis of the question.
yeah, and so there's definitely a silver tsunami, and I hope that Raven is positioned to at least take a few of those silver hairs uh, into its quiver. But and we'd be fortunate to do so. And so many of those businesses were brought up like children almost, and the blood, sweat, and tears, to use the phrase, of the um, aged owner. You can really feel it when you walk in. And one of our objectives is to really try to honor the legacy of the owner, and honor really what is not often evident when you're dealing with a 20 plus year old company. I mean, they've already gotten through the cash flow crisis. They've already gotten through the time when mom and pop had to reach deep and clear out their savings account more than once to make payroll and things like that. So what we're seeing is the need to really come alongside that type of seller, because I'm also seeing some things inside of the deals that we've looked at. Is the seller, if they're um, not every business broker is created equally. Um,
Amen.
there are some really great ones. Unfortunately, not all of them give you the information that you need. They didn't hear the first part of what I was talking about in the 20 years that you spent in commercial banking, where, I mean, technically, as a buyer, we are the customer, but oftentimes we're really not treated that way. More times than not, from a business broker, you're treated rudely. Um, they want so much information from you and try to uh, they want, well, really, they're trying to commit so much to their own process and earn their fee based upon, okay, we want to get you to a letter of intent or the look, I mean, this thing's got the businesses are purchased unless you're already in that industry. It's a function of mathematics. You uh, dealt with that in commercial underwriting. I mean, unless we're looking to pay a premium because we're already in that space, we're trying to eliminate a customer. We're trying to potentially acquire revenue that is going to grow over a period of time. That's the only reason we would overpay.
Right.
But what I'm seeing is I'm seeing business brokers cause trouble on deals that should close, and I'm seeing the seller kind of treat this like a thing. Well, will make me an offer, and like it's a function of math. The offer has the deal has to be defended by the seller and its advisors on that's the first step. So I'm seeing a lot of things that could have closed unwind because of those two things.
I agree with you.
And um, we've been very close with financing ready to go on candidly a couple deals that we really wanted. And one was unwound just because of a uh, a group wanting to stand on process, and the other one was unwound just because of a lack of understanding of, okay, there is going to be a time when we're going to have to sign a purchase agreement, and that's going to maybe be a bit overwhelming. And um, so we've been learning tons about just how to approach it, how not to approach it. And we're fortunate to still be out here looking at deals. We're in the Midwest next week underwriting a deal or doing due diligence on a deal that we have under letter of intent that we're excited to close in the municipal sewer space.
Yeah, I agree with what you said in the broker landscape. I mean, there are those who have been in this space for a while, either representing seller side or buy side, and get incredibly frustrated by the noise in the broker segment. And to your point, to be fair, there are some amazing brokers that I've had a
Yeah.
chance to meet and know, and they are champions for both parties, and they truly want to see the deal succeed. And yet again, there are a vast majority, maybe a high multiple of pro versus con or con versus pro, but
Hmm.
it is unfortunate. And I think one of the dynamics that I've seen in my own experience, and I've had a hand in about 30 of these deals over the last
Wow.
3 years, and representing mainly the buyer's side. But what I've seen happen is sellers feel the need, and to your point, it is their baby. It's like giving your child up for adoption, basically. It's not about, for many of these guys, emotionally, it's not about the money. It's the connection with the employees, the customers, the work. It's a very deep rooted emotional hook.
Yes.
And they fundamentally don't really know what their business is worth, so they're going to market trusting somebody to give them a fair valuation. And too often, what I saw happen is sellers show up having just left the golf course with their beer drinking buddies, and somebody tags a value on the business, and there's no legitimate basis for that value, but now it's locked in the seller's mind. You mean I can get 10 million for this deal, or I can get 20 million for this deal? All right, let's go. And when you start doing some conventional analysis and scrutiny of it, and no, you can't. You're not going to get that price for it. You're going to get something, but it's probably not that. And the good brokers that I've worked with, they do a really good job on the front end of fairly and equitably level setting to set a good number that is
Yes.
achievable. But then I also met brokers who they'll accept the seller's asking price, and but it's very comparable in my mind to residential real estate. If a seller thinks his house is worth $300 a square foot, but the market around him is only 150, you're not going to get you're not going to get a buyer.
You're right. We had a situation where this seller had a dream all the way since he was an 8-year-old child of having $10 million in the bank after some type of closing. And that's a great dream. His business, however, didn't warrant that type. It was close, but and that I think was the problem. If we were really way off on that particular deal, I think we were probably $1.8 million or something off of getting him there. But still, I mean, it's $1.8 million. You're not going to just do that. And so that deal didn't happen, and because he just was going to hold out until someone would pay him that, and maybe he could get that in the other situation by selling to a competitor, as opposed to a financial investor. But no, it's amazing you've been involved in 30 deals over 3 years. I mean, that's a lot of activity.
Well, and let me be clear, not all of them made. I mean, I'll have to think a moment about the ones that really landed. I think it was probably only about 12 that actually made it out of that 30.
That's still a high closing ratio. Well done.
The challenge that also exists is that sometimes when these sellers decide to come to market, they do in fact have a positive cash flowing business. So there's a value there of some notion, and again, you can research and analyze and create some comparables, and you can come up with multiples that are fair and reasonable for that segment, but what also exists is the opportunity that these owner founders, they've worked hard, they've done things, to the good. To your point, they're past that sweating the cash flow. They've actually scaled and grown a little bit, but they maybe haven't yet sophisticated systems, procedures, their own methodologies to be appealing to a buyer to come in and take over, because too much of the operating guts of the company is in the owner's brain. And, for a seller to come in.
We had a situation, we purchased a company that I said, if you don't mind, after this, we'll just take a look at your inventory system. And he pointed to his head.
Yeah. Yeah.
And he said, that's the pricing module as well.
Right. And that's the point, that for many of these sellers who think because of either they're aging out or maybe I had some sellers that had health issues that were discovered that created an urgency about getting it done. But when you analyze the business, you do the initial due diligence, you realize, if you could do these 3 things, we could get you another 2x on your business. But without that, you're not going to get that. And so some are willing to hang in for the year or 2 it may take to affect that change and thus increase the value of it, but some can't for various reasons.
Yes, you're right.
So it is interesting, and it is a big challenge. So let me ask you this: Do you have a vision in your own mind of how one might conquer the challenge with the broker connection in this space?
And I echo what you said. I mean, we're working with one right now that is so amazingly professional and proficient, and has given us so many documents in a data room for due diligence, and has just been a real advocate for our side, not unprofessionally. I mean, they're on the sell side, but I really haven't cracked that one yet. I have even tried, because it is such a pesky situation, with multiple degrees of quality control. I've even tried hiring a broker to then talk with other brokers to kind of help, but that didn't work. One of the things so we really just started taking referrals from banks or from lawyers or from accountants that are acting or that know of deals. And then it seems to pave the way without all the just the hard work with the brokers. But no, I can't take credit for any type of hack, trick, or I think we've even tried just being exceptionally nice, and that doesn't work. So there are a lot of businesses represented by 2 or 3 of them that have a similar culture, and that seems to be a problem.
Yeah, yeah. Yeah, I don't know. I don't have a silver bullet for it either, and I think it is unfortunate. And if anything, the one thing that I'm certainly concerned on the behalf of my fellow boomers who might be wanting to sell is that there is a lot of noise in the system, and a lot of time can be spent wasted trying to get a deal over the goal line.
Yes.
And the one thing I've done to try to contribute a little bit of good to the process, I predominantly have coached and advised buyers, and often my buyer profile is the young person who is in corporate. They're a little burned out, but they've accumulated some cash to put in play, and through various forms of creative financing, they can 10x their down payment and still acquire one of these businesses. But what I tell them is that you've got to start with that emotional connection
when
you've got to try to get the opportunity to meet the seller.
Yes.
And
within a couple of meetings, that needs to be the third step. I mean,
right. And if the broker's not allowing you that kind of access, to me, that's a red flag that you need to either walk away or find a way around that. But the good brokers that I've had a chance to meet and know, they are quick to facilitate that meeting. And they've learned a little bit about the seller, and they do their own assessment of whether or not the two parties are going to connect and have some chemistry, and then they'll be advocates for that meeting to happen. And when it does happen, that buyer needs to be able to move in. And I always coach my clients to be very, very proactive in that idea of honoring the legacy.
That's very good advice. Yeah.
We'll get to the numbers. Let's hold off on the numbers. Let's talk about the legacy first.
Correct.
And if you get that opportunity to go to a dinner meeting with the seller and his spouse, talk about their story.
Absolutely.
Ask their story. What was their journey? What did they go through? And let them talk about it.
I agree, and I also think that it's important for guys my age and younger that are looking to buy companies, that we realize that many times this, often a husband and wife combo, have, unless they have something planned out, like we're going to go do this, or I'm going to be on the golf course, or oftentimes they don't know what they're going to do once they sell the company. So
Right.
I think it's important as a nod to the legacy to say, there's not, in most cases, only a rare few, is the founder operator not going to be a great person to still have around to help with the employees, to help with the SOPs, to help with measurement of KPIs, to manage the key relationships, both vendor and customer. And so we've really tried to feature in our conversations our willingness to come around that potential conversation of having the founder owner be a consultant, be a continued employee, and just to make sure they know that there still is a place to go, and we're not cleaning out their office.
Right. No, I agree with you, and I have likewise done that with my buyer clients. I've encouraged them to in the final documentation to actually create a services agreement with that seller. And sometimes it's short, sometimes it's 90 days full time, 90 days part time, 90 days on call, that kind of structure. But when the chemistry is right, you are correct. There's a good opportunity for that seller to stay involved, but it gets tricky. I mean, the new owner wants to become the new owner, so you have to carefully negotiate that and work through it. And every once in a while, you end up with a really challenging relationship after the papers are signed. But for the most part, I agree with you that that's not the case. And those parties that are exiting, they are still searching. They know they want to get out of it, but they really don't know what they're going to do otherwise. It becomes a real challenge.
It does.
Well, Paul, I think we're about up on time for today.
Okay.
Thank you so much for sharing. Tell folks the best way to get a hold of you if they want some assistance or some consult with you.
You can reach us at Raven Resources Corp., Dallas, Texas. We're on the web at rvn.rs. rvn.rs. There's a contact form there. There's emails. Our whole team's featured on a team section, and we'd love to hear from sellers, buyers, potential investors, bankers. No haters, please. But
yeah,
we'll
let the haters hate, right?
That's right. It's been great to be with you, Doug. You've got such a great background, and I'm sure your viewers really enjoy this show. So I appreciate you having me.
You're very welcome, Paul. Thank you so much. Well, folks, this is a part of the show. I do like to remind you, we've got a video version of this over on YouTube. If you've been listening on your favorite streaming service, when you get a break, go over to YouTube, channel by the same name, Leadership Powered by Common Sense. Check out our archives. Drop me a line. Let me know if you've got a guest or an idea, or maybe you want to be a guest on the show. I'd be happy to talk with you about that. But I think we're wrapped up for today, so we're going to sign off, say goodbye. Go out there and make it a great day.
You've been listening to Leadership Powered by Common Sense, hosted by Doug Thorpe. If you would like to know more about the coaching and advisory services he provides, visit dougthorpe.com.